Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Tuesday, April the 2nd. Back to the markets. Hope everybody enjoyed their long Easter weekend for those who celebrate. Yesterday we had a small, slightly lower down day, partly due to the bad MSI ISM numbers, which led the markets lower. We were down a little bit. Little deeper than where we closed at. I'll run through the numbers real quick. Nasdaq down 30, Dow down only 5. We were down about 45, 50 points at one point. S&P down 7, and the dollar down slightly. We did get some lower equities, but we have deteriorating breadth of the market right now. So markets internally are starting to deteriorate. However, does that mean that we can push higher? Yes, we can, and I'm going to show that to you. I'm going to cover that in this segment today. Looks like that it is a stock picker's market, no question about it. We having rotation, money rotating from one sector to another. That's why the market continues to be bid up. Money is not coming physically out, but certain sectors, and it's putting to work in other areas. So until we get a full-fledged sell-off, this market will either consolidate and grind higher until that time comes. Now, one thing I did notice yesterday was the Russell was extremely lower than the other 5 indices that we follow, and a lot, believe it or not, when you're looking at the market, most retail just look at what the Dow does, but really don't want to do that. Dow is technically a follower of the 5 indices that we follow, and we want to really continue to look at Nasdaq, Russell. Even what I looked at was the semiconductors, the SOX, or you can look at the SMH, which I have tonight, and I want to show you. They're starting to break down too, and they're one of the leaders that kind of lead the market. And when technology starts to fail, as well as financials, you have to be careful and use a lot of caution if you're long this market. So keep an eye on, we want to keep an eye on some failed breakouts in these indices that could kind of lead to some volatility in the coming days and weeks. So that's what we're going to discuss today going forward. Now, let's take a look at some of the indicators here. Believe it or not, really not much has changed since our last morning call on Thursday. Yesterday, I didn't put one out because really nothing happened on Friday other than what I expected, and I mentioned on Thursday's video was the slow grind, never short a dull market type thing. Bullish percent is back on a buy signal here, ever so slightly, but we're chopping around here. So this is the key thing is what I want to show you. As we chop around, we are in a topping process actually, but do we have a top in yet? No one knows, but what we really want to see is breaking down some major pivotal support areas and price moving lower, making lower lows and lower highs. And that's what's really going to really get me excited when we see that the market's top. I'm not looking to call a top and or a bottom. I don't do that. We're trend traders. We look for the meat of the move. And even if it's you're trading for the day, that doesn't mean you could still swing trade a stock for the day and kind of ride it out as long as possible. So anyway, we have a little bit, we're on a buy signal, but we're chopping around here. So that's something interesting that I wanted to show you. Now, NYMO really hasn't done much of anything since the beginning of the year. As you can see, we did pop up once, twice, and then now we just kind of sideways consolidated all of February, all of March, and now we started April. So we just wanted to, I always like to show you what's going on with the NYMO, but really not much has happened here at all. Now, I did mention here the S&P percent stocks above the 50-day moving average. We have divergence. We've had divergence now for a good part of middle of February now, up until now, and as you can see here, markets moving higher, stocks are not moving. So we have selected indices that are moving higher, such as the S&P and the Dow. They're moving higher while the other indices are not. They've actually started lagging. So we have intermarket divergence, and that's something that I want you guys to be aware of, okay? Now we have our weekly, which I want to show you. Our New York Stock Exchange Summation Index went back on a sell signal yesterday. So, well, obviously the close of Friday, we went on a sell signal, and we are, as you can see here, we are chopping around here. So as we chop, that's giving us clues that we could be forming some sort of a top. Look at the NASI, which is the Nasdaq Summation Index. Same thing. We are just chopping around. Now we are back on a sell signal as well. So we have mixed. We have mixed readings in our indicators, but we've had that for quite some time. But you always want to be aware of what's happening. Now, as you're trading during the day, it's a little different, right? We want to be selective in our stocks of what we're trading. You can short relative weakness to the market if you're uncomfortable buying stocks at these levels. If you're a longer term, more swing trader, tighten up your stops, buy some protection. Protection is very cheap right now. Or you could just be brave enough to ride out the storm when that storm does come. No one knows. There's no catalyst to sell the market. The market will continue to grind higher. Let's take a look at copper. Here's another divergence. Copper, eventually, if copper continues to sell off, and here's a daily chart, if copper continues to sell off, this will catch up to the market. It will catch up. And here's the weekly, as you can see here. Here's that big symmetrical triangle that we had. We were in here for months. We are finally out of it now. So now copper can back test it again and then fail miserably. So this is what we're going to see. This is a weekly chart. This is only yesterday's price action right here. But we'll just keep it. We'll keep an eye on this. But copper eventually will catch up to the markets. Another thing that I'm not really too happy with is the EEM, the emerging market sector. Take a look at this. When you have emerging markets diverging away from what equities are doing in the U.S., it's also a cue to be cautious here. Look at our ratio chart from our S&P moving lower. We have now we have a bounce in our stochastics. MACD actually same thing here, but look at what's happening here. Very, very weak. Very, very weak price action. We have big distribution yesterday. Down day, back testing the 20-day moving average, so not looking too pretty. Here's the FXI, same thing. Now here's China. Now China is one of the leaders, right? When China starts buying our products, China's healthy, everything else starts to follow. China's breaking down, so this is also something that you want to use caution. Now again, this is not just as one big. I want to take a look at this as a big picture, okay? But you have to use caution because you could say to yourself, well, wait a minute, we can have a sell-off at any given time. Somebody wants to get rid of some big stocks, a lot of stocks that they're holding, big fund. Well, that could actually start some sort of a sell-off, some sort of a trigger here. Here's the VIX, pretty much subdued the last few days. Take a look at the VIX in here. As you can see, just consolidating. So this is actually quite bullish. Now, if we start breaking these lows, that's another story. But keep an eye on the VIX here. VIX hasn't done much, but when the VIX starts to move, then we could be looking at something really interesting. When you have all of the moon starting to light up, so to speak, we are the indicators that we're following. I'm really liking the way things are starting to set up. Now we need price to follow. Here's the dollar, kind of back testing the 20-day moving average. We'll see how this dollar fares and what kind of relationship it's starting to set up here. Right now, as you know, we have U.S. equities really hot worldwide, so any European or Asian participant will have to buy U.S. dollars to buy stocks, and that's what's pushing equity. That's what's pushing the U.S. dollar up. As you know, it was and it could still be inversely correlated to what the U.S. What the U.S. stocks are doing. However, things do change, so let's just keep an eye on what the dollar does. All right, so let's go right into the charts here. Here's the monthly chart. We're literally about $1 away from our high. This will be close to our third touch here. So this is extended. I'd say very extended. I wouldn't be buying stocks up here or adding to any kind of swing trade position. That's just me. I like to be buying on pullbacks into some sort of support area. But you can see we are literally at within $1 or so to that range. Here's the S&P versus the average true range. As you can see here, we need to see this really start to pick up if you're looking for a market sell-off here. We're in this uptrend channel. We have to move back down again. Now we're back at support. So any kind of uptick breaking above $14, $15 here would probably get this market to start to move a little bit lower. It's just wanted to show you the S&P versus the ATR. Here is the spiders. As you can see here, we are still within this range. We did break down. Now we're within our inside day from Friday. So really, not much has changed here. Nothing too bad. But if you'll see what when I start getting into the certain sectors, I'll show you inside day from Friday from the spiders. Here is the spider 60-minute chart within the larger end of this range here. As you can see here, look at the our indicator starting to roll over here as price. Now, price did break down yesterday on that bad ISM number, but kind of bounced right back, and market continues to be well bid. I got to tell you, I have never seen a market that's so well bid up in this time frame. Anyway, here's a 30-minute chart again, guys. In this range for the last, oh gosh, a month, easy month or so, maybe more. But again, nothing really much going on. Once the hour and a half is pretty much done, 11 o'clock, and if you're following the markets intraday, you'll see it's very, very boring, very, very slow until something gives here. Here's the S&P 500 cash. Here are just some of these areas I just marked here. As you go, there is absolutely no change here. We are just now have an inside day from Friday. Here's the transportation sector. Now, here's what I wanted to show you. As you can see, the Dow and the S&P had inside days, right? Well, our leader, which is the transportation sector, had a large engulfing candle outside day, broke below the 20, held this little trend line here, support. So it's be interesting to see if we get a breakdown out of this area and a back test, or markets recover again from yesterday and start to move higher. Now, in the pre-market session, we are up about $2. Really no big deal, but again, no real movement in the overnight session. So we'll see what happens here. But again, look at the candle, outside day reversal from Friday, where we had our Dow and S&P really had little movement at all and recovered nicely. Same thing with the IWMs. Large outside day reversal. This was the weakest of the 5 that we follow, one of our leaders, and we are actually broke below the 20-day moving average, and we are now sitting on our horizontal support. So a break below this would test at least a 50-day. Now, remember, there's a good gauge of risk on, risk off. Clearly a risk-off day for the Russell. Now, could it be a one-hit wonder? Sure it can. But with this type of volume, I would think not. And especially when the transport's also selling off and we have our really deteriorating breadth of the market, I would say use caution here. Now, that does not mean that this market can't push high one more time. I would really, to be honest with you, I'd love to see a 1575 touch and then fail. Then I would be aggressively short this market. And there's going to be a lot of money to be made, guys. We just need to be patient. And I know it's been a real horror show as far as volatility is concerned, the beginning of the year. But that will change. Things do change. And we're coming into a risk-off environment right now, seasonality trends, which is really coming into April, May. So let's see what happens to see if this thing follows through. Here's the XLF. Bollinger Band's pitching inside day. Really not much going on in the XLF. That's also a sector to keep an eye on. As you can see, the diamonds with our S&P held up nicely. And it's incredible the way they bid up the diamonds, which is the Dow Jones, obviously, versus the other sectors. It's just, you know, the brick and mortar type sector, they feel it's a little more of a safe haven. That's the only assumption that I can make here. But again, inside day, really not much going on here in the diamonds, whereas the other ones we had large engulfing red candles. Okay, Apple, I mentioned this several weeks ago, and I've been mentioning this pretty much on. We held up nicely, that big engulfing candle. We tested this valid uptrend line, and we failed miserably. We broke down before 440. I said it needs to hold 450, 440. We broke down, and now we're at the 428. If it breaks 420, guys, you're going to see a big flush to the 400, and then we will need to really reevaluate. But this is really, really not looking good. I've been saying this for months. This is only a day trading stock. Do not start accumulating Apple above 400. I think you see 350. 350, 380, and then start to nibble ever so slightly. But Apple right now is just a day trading stock. This stock is in a big hurt of pain. We broke 440 again, and now we're testing this little trend line area here. And this really, actually, excuse me, this is that little bullish falling wedge we had within this large triangle, and we did break out of it and then held. So be real careful here. I would not be looking to accumulate Apple at these levels. Take a look at the SMH, and I was talking to you about the semiconductors. Another sector here, big major sector that fails. If this were to fail, and right now it doesn't look too good, we could be really in for some more downside in technology before it starts to recover. Watch the SOX index if you can watch it. If not, SMH is your next best thing. It's the ETF for the semiconductor sector. This is something that I would love to see break down, back test, and then really start. I like to accumulate technology at much lower levels here because as you can see here in the Qs, we really haven't gone anywhere, but I think technology would be a good spot to accumulate when market really starts to break down again. All right, guys, that's really about it. Let's see. Hopefully, we get some movement in the next few days. We have a full week of trading, and it's really nice to get back to work. We will see everybody tomorrow. Have a great day. Be safe out there. Use your stops. Take care.